Happy Monday, everybody. I know there's nothing happy about Monday. There is one thing happy about Monday. It's not a Wednesday. That's the answer to that. All right, so I got some announcements, some things I want to share. As I've mentioned the past few class sessions, if you are interested in joining the Spire Energy lunch, which is going to be a week from today, right after this class, which a week from today after this class is the first exam, by the way, which we'll talk a little bit about here shortly. If you're interested in joining in, please send me an email. We have 3 spots taken up, so a couple more that we could potentially fill if you're interested in joining. I've been kind of holding on to this, but I'll go ahead and mention it now. A organization called TrueUp, which is basically a gamification company, has announced a innovation challenge called Race the AI. Now, basically what it is, it's just going to be kind of like you're fighting against a rogue AI using other AI tools to figure out the problems. If you are interested in the possibility of joining in this, basically they've allowed us to do at least 2 different teams at Truman State, 2 teams of 4 people. Currently, we have nobody on any team, so I'm opening it up to anybody who'd like to join in. You can reach out to me. The winning team is going to get $3,000, so it's a pretty hefty prize. And I don't think it's a lot of competition right now. Currently, there's only 7 schools who are participating. We would be number 8. So if you have an interest in AI and have an interest you'd like to interest cultivating, it's going to be a cool activity regardless of the prize competition. You can go to racetheai.com. That's all the website is called racetheai.com, and learn a little bit about it, see if that's your jam. If you are interested, send me an email. I'm going to be working on signups for the next couple of weeks, and I figure since it's relevant, since we're talking about AI in this class, some people might have a passing interest in that. You're also welcome to share this with other people who are not in this class to see if they want to participate as well. So yeah, 2 teams, 4 people, so we can accommodate 8 people max. But yeah, interested in looking into that. And then what else was I going to talk about? Oh yeah, I remember. There's something really important above and beyond all that. The Race the AI, above and beyond the lunch. In a week, we have our first exam. I've already talked a little bit about that. I talked about it on Friday, but I want to reiterate. Today is our last lecture, before the next exam. We have a homework assignment Wednesday. Wednesday is going to be probably a fairly short class, but it'll be a good opportunity to ask any questions to follow up. On Friday, we'll have an exam review. The exam review basically contains a discussion of the study guide, the study guide is long and detailed. I will not go over every single component. I strongly recommend that you look at the study guide in advance. And if there's something on there that you're not sure about, come in prepared to ask questions. And then also on Friday, we'll walk through the practice exam. More important than the study guide, I would make sure that you complete the practice exam in advance. It really defeats the purpose if you come in not having worked the practice exam, because I can answer the questions. I wrote them, all right? But the important point is you being able to answer the questions. It's going to give you a good idea of where you stand as far as preparation for the exam. These are exam level questions that I've shared on the practice exam. So yeah, that's just important to note. So please make sure you're prepared for the exam review coming up this coming Friday, and then exam on Monday. Exam will be in this classroom, 50 minutes, and it will. I don't think anybody should have a problem finishing it, but we'll do that, and then we'll have our exam discussion next Wednesday, and then we have fall break, so everybody gets to enjoy a couple of days off at least. So anybody just really looking at fall break saying, "Oh, finally a chance for me to get caught up on my schoolwork"? Is that what are you going to actually try to enjoy fall break? I'm already going to a conference with Dr. Caden, which I've had mixed feelings about. Dr. Caden's a wonderful human being, but I kind of like, I really want to take the Friday off, but I guess the work never ends. Speaking of work never ending, we have one more business process we have to talk about. We have to talk about the conversion business process, which you are going to hear me refer to this as the inventory business process. So just as a reflection, our first process we talked about was sales and collection. What did I call that? This was an easy question. I was giving you a gimme question, like a really, really simple one to start off the day before I asked the hard questions. I called that the revenue process. Okay. Then we had the purchases and payable process, which that's just the purchasing process. I frequently call it the procurement process, but I probably won't do that too often in this course. And then we have the conversion business process, which I talk about, which is I say that's the inventory process. So I have different names for all of these. You should be familiar with the vernacular for all of them. whatever we're talking about. So how does this process come about? Now, I'm going to go ahead and shortcut this by saying that the primary two business processes in the organization are going to be revenues and purchases. It's very, very difficult for any organization to exist without either of those two business processes. So those are going to be what drive all of the process areas. I'm also going to say that we could cover multiple business process areas that are not part of this discussion. We're going to be talking about this one business process area, and then we're done. We're done with business processes for the semester. So why is it that we selected this particular one business process? So the first simple answer is that's what's in the book. All right. But the more complex answer is this particular business process ties our other two processes together, as we're going to see. And conversion is going to be something that even if we're talking about a simplistic service type scenario, most organizations are going to have some sort of conversion business process. The easiest way to identify the conversion process is going to be via inventory, which is why I talk about this in the inventory process. But if you were talking about a service organization, you could actually make an argument that they would have some sort of conversion as well. They would acquire services that they can convert to services they provide as revenue to other organizations. For example, they're going to buy software and going to have program systems. Then they're going to use those systems to actually provide services to other individuals. So they acquire services, they transform those services into services that they can use. So that's an easy understanding. But for the most part, we're going to be focused on the idea of inventory. Now, quick note. I noticed this in my lecture from last year when I was reviewing this morning. So whenever I start talking about 221, is everybody familiar with 221? What I'm talking about with 221? I tend to use the vernacular 220, 221 for True Truman classes, which I'm sure if somebody watches the videos outside of Truman State says, what do you mean by 221? I don't get that. So I'm talking about managerial accounting, okay? But I'm going to refer to that as 221 consistently throughout this particular lecture. So if you hear me say 221, I'm talking about Accounting 221, which was Introduction to Managerial Accounting. A lot of the concepts that we learned in that course are going to be very familiar. I'm also going to make a lot of jokes about Dr. Otero, which I fully expect we'll get back to her. That's okay. I'll see her glare in the department meeting later today. All right. So examine our two primary organization process areas, revenue and purchasing. And like I said, these are primary is actually a very good term for these processes. It's very difficult for any organization to exist without these. You can have multiple business process areas in an organization, but without revenue or purchasing, the other process areas will not function. Now, what are some other examples of these? We can have inventory, which we're going to talk about here, which are going to be our conversion process. Human resources or payroll, investing or financing. You will see those in other courses. I can tell you because I teach another course where we talk about those process areas. But those are supplementary processes. Those basically serve the primary business process areas, which we're going to refer to as the revenue and purchasing process. So why are we talking about conversion process? The answer is it falls right in between revenue and purchasing. It falls right in between revenue and purchasing. And if you don't believe me, let's just go ahead and take a look and see what a traditional conversion business process looks like. Now, just for context, just for memory's sake, we're going to go back, harken back to 221, our managerial accounting reflection. And remember, when you first sat in that course and you were probably taking it with Dr. Otero, or did somebody take it with Dr. Deers? Or let's see, is Dr. Otero pretty much everybody in this course? I have a hard time keeping up with who teaches the courses. There was a time I taught 221, so I do know a little bit about it. But Dr. Otero, and Dr. Otero started out with the course and it says there are 3 types of product costs when you talk about a manufacturing environment. What are those 3 product costs called? Materials, labor, overhead. Does everybody remember that? And if you ever want to get a Dr. Otero skin, you can go ahead and say, yeah, Dr. Barnes says that's all there is to cost accounting, just materials, labor, and overhead. And she's going to roll her eyes and say, don't trust anything Dr. Barnes said, which is good advice. All right, good advice. All right, but direct materials, direct labor, and manufacturing overhead. And we're going to delve down a little bit deeper in that because it does require some discussion. So this is figure 9-1 from the textbook, and it talks about a traditional manufacturing environment. Now, if you remember from 221, the whole purpose of learning the manufacturing environment, it was to look at the most complex inventory system that you could. And that way you would have enough knowledge that you could deal with less complex systems. So manufacturing is the most complex environment. And that's still applicable to the information system discussion we're going to have today. Not every single system we're going to talk about is going to be manufacturing. Some of it may not even be merchandising, but we can use this to kind of backwalk into anything that we would use that's a simpler system. That being said, learning the manufacturing system is going to give us all of the nuts and bolts we need to create our accounting information system from the ground up. So this is going to be our default. This is going to be our default learning point. If we wanted to modify from this, it's pretty straightforward to do. So yeah, remember we talk about materials, labor, and overhead. Those are going to be characteristic of one category of three types of categories of inventory. So in your manufacturing environment, you start out with the base product, okay, the base good, okay, which are going to be your raw materials inventory. And then when you decide to put that into production, that's where you transfer inventory into work in process inventory. Now, work in process inventory is interesting because that's where we start recognizing our product costs. That's where we recognize that direct materials. That's where we recognize that direct labor. That's where we recognize manufacturing overhead. As we move forward, we can kind of see the work in process inventory. This is where we recognize those direct materials. Those are going to work in process or the work in process inventory. Then we see down here, it says work in process inventory. And for some reason, the book uses the term manufacturing wages, which I'm not sure why they decided to use that nomenclature. It's probably from another textbook. But when we learned it back in Accounting 221, we learned a minute managerial, it was called wages payable. Does everybody remember that? It's the exact same thing. I just don't know why they decided to term it as manufacturing wages. So this is a recognition of direct labor. All right. So this is going to be our direct materials. This is our direct labor. And then this is actually, they included a step in here, which is a little bit weird, which is the payment of wages payable. I'm not sure why they decided to include that in here. That's external to the process, but they included it. So there you have it. And then we have a couple of interesting points. We have some debits to manufacturing overhead, but then a credit to manufacturing overhead. So this is the brownie point question. Why is manufacturing overhead debited in some situations and credited in other situations? Does everybody remember that? So it's been so long since I took the course and I don't remember. And Dr. Otero talks so fast. I said, no, that's me. I talk fast. So yeah. So does everybody remember the idea of actual overhead versus allocated overhead? So overhead had to be allocated out, and the idea behind that has to go back to the basis of accrual idea of accrual basis accounting. Okay, accrual basis accounting says that we recognize expenses when the revenues are incurred, so we had some sort of estimate process in place. That was allocation of overhead. Then later on, we would recognize actual overhead once we knew what the true costs were. And that would lead to the really weird things where you'd have underallocated overhead versus overallocated overhead. And I know I'm bringing nightmares back. I'm not going to ask you to fix the allocation for overhead, okay? If you were an expert at that, I'm sorry. That's beyond the scope of this course. But that was the whole idea, is that we were trying to make an estimate for overhead, and then we were trying to recognize actual overhead cost. Oftentimes, we don't know the actual overhead cost until afterwards. But that's what these are recognizing. So this entry right here, this entry and this entry right here, you can largely ignore those. Those are relevant to managerial accounting. They're not as relevant to what we need to know in this course. So basically, we can ignore this entry, we can ignore these two entries here, but we do need to know what's going on here. So that's the actual overhead, or is this the allocation of overhead? I'll give you a hint. It's in the description right here if you read it. So it's allocation of overhead. Okay. Boy, I'm on top of things today. I'm on top of things today. Yeah. Allocation of overhead. That's where we're recognizing the allocation of overhead. And remember, there's really weird systems. You know, if you start out with those, depending on the drivers, this is another thing. You won't have to worry about how to determine manufacturing overhead. We're not going that far back to 221 or to cost accounting when we start talking about. I don't know. Is anybody in cost accounting or taking cost accounting with Dr. Otero? That's where she gets into those really, really funky systems. She like saying ABC was child's play. Now we're going to go into types of accounting that I can't even pronounce because they're in a different language. Yeah, and she just talks about this. But we're not going to worry about how we allocate overhead. That's just going to be a given to us with allocation of overhead. Then once we finish production, what happens? Does just the goods just sit in work in process inventory forever? Do they go to a different inventory system? They go into finished goods. Okay, once we finish production, they get to finished goods. So we debit finished goods, and we're move work in process inventory, move them out of work in process inventory. So remember the three types of inventory categorizations. We had our raw materials, we had our work in process inventory, finished goods. Anything that has to deal with kind of an inventory item, you do need to know about this because that's a fundamental process of our fundamental part of this process area. That being said, we're not going to worry too much about the recognition of actual overhead or the recognition of wages payable. But we do need to talk about where this whole idea of conversion comes from. Remember, this is called the conversion process by the book. So why did I term it the inventory process? Well, the term conversion suggests the process of transforming goods and services into goods and services for sale, which is the whole idea of managerial accounting. Does anybody remember the concept of conversion cost back from your managerial or cost accounting class? Does anybody remember that? So that term conversion cost came up, and it wasn't largely used when I taught it, but it may be used more in other courses. What are conversion costs? Conversion costs, strictly speaking, are labor and overhead costs. Labor and overhead costs. And they represent the cost of converting a raw material into a finished good. Think about it logically. We're going to look at this table right over here. All right. Everybody look at the table. I want you to appreciate this table right here. This work of art, that's the table. All right. Now, I know that there's a lot that's going on at this table. There's plastic molding and there's probably screws in it and some sort of pieces of metal. But let's just assume it's a pure wooden table. Could I just take a piece of wood, plop it on the ground, and then voila, table? It'd be a very rough table. It probably wouldn't be very good for anything. There has to be some sort of conversion steps that take place. What is involved in conversion? Well, there's the labor that goes into transforming it from a piece of wood into a table. And there's the overhead, which are the additional costs, like the glue or the screws or the woodworking that goes into that, things that are not directly traceable. So conversion, when we talk about that, it's taking from one item from being a raw material into a finished good. So again, I know that that's not wood. In fact, there's probably not even real wood in there. It's probably particle board that's very, very tightly pressed. And if you want to get technical about it, yeah, I think that's the case. But if we're assuming it's a wooden table, then we're saying converting a piece of wood into a table, that's our conversion step. And that's the crux of inventory. So now that we have a basic review of the inventory conversion process, let's go ahead and apply it to what we're going to be doing today. All right. And you can probably guess that's going to involve BPMN diagrams and UML diagrams. Good news is if you still have a strong grasp on what you did in 221, this is not a very difficult step forward. If you were completely forgotten everything that you did in managerial accounting and you just need a refresher, that's where the difficulty is going to come in. So let's just go ahead and talk about what it is we need to know. So this is the oh goodness gracious. I thought I updated this. Hold on. I'm really embarrassed. I am almost positive I updated this in some set of slides, but this is not purchasing process description. This is conversion process description. Oh my goodness. Hate it when those copy and paste come back to haunt you, right? When you just kind of make a mistake. In fact, I'm almost positive I made this correction and then somehow it just got away from me again. So, and this is probably going to happen again in the future. Who knows? Anyway, conversion process description. This is a summary. I actually updated the page number. I just forgot to update the conversion process description. So, when a quantity of inventory item drops below a prescribed level, production of new inventory occurs. Now, note that this is going to be not driven by our customers. This is driven, our customer suppliers, this is driven by own internal processes. We've got some sort of quantity that we say, if we reach below that level, then we start new production. That's going to be what drives that. The start of production, raw materials are transferred to work in process inventory. We already know that. That's this step right here. All right. Transferring raw materials into work in process inventory. Now remember, it's unlikely that I'll ask too many journal entries, but though I may ask a few. If we're transferring from from raw materials inventory to work in process, we're debiting work in process inventory and crediting raw materials inventory. Now you may say, Dr. Barnes, that's such an obvious item. I know that when you debit an asset that you increase it, when you credit an asset, you decrease it, but you'd be surprised how frequently that just escapes from people. They're just like, okay, we're starting with raw materials inventory and moving to work in process inventory. Raw materials first, work in process second. Nope, it's the other way around. It's the other way around. Debit the work in process inventory. Based on the stage of inventory production, additional materials and labor assigned to work in process. This is the conversion we're talking about. At some point, we're going to say, we need some more labor, we need some more overhead, we need those things added to it, okay? If we're also talking about, so materials and labor, additional materials and labor. So this, remember we can note that materials and labor can either be direct in nature, so we can actually trace, we can actually track it directly, or they can be indirect. How do we categorize indirect materials and indirect labor? What is the term for that? Give you a hint. It's one of the three product costs, and it's not materials and labor. Overhead, yes. Okay. Indirect materials and indirect labor is categorized as overhead. Why? Because indirect materials and indirect labor do not have direct associations with production. So what's an example of an indirect labor? Janitorial services, custodial services. Okay. So in going and producing this table, how much custodial services did I have for that? It's like, well, I mean, they were cleaning the entire factory, Dr. Barnes. It's not directly traceable. I said, there you go. Okay. That's an example of indirect labor that would be allocated to overhead because I can't assign that directly. I don't have direct labor ability to track that. So overhead is also going to be included and allocated in the work in process, which is our indirect materials and indirect labor. And then once we finish production, work in process inventory is transferred to get finished goods inventory. Now let's just go ahead and I want to go back and go to the journal entries to make sure that we're clear on what the assignment is. This first item is basically saying transferring the raw materials inventory or work in process. We looked at that one. All right. Then, or sorry, this is where raw materials are transferred to work in process inventory. My apologies. This one right here is our first journal entry. Then stage of inventory production, additional materials and labor assigned to work in process. We would assign more raw materials if necessary, and we would also assign labor, which is just going to be this step right here, assigning labor right here, those manufacturing wages, or as you probably learned in 221, wages payable. By the way, if I ask you a journal entry like this on the exam, wages payable would be fine. Wages, anything except for something that doesn't use the word labor or something along those lines will be appropriate. So a wages payable would be the preference there, but that's what we're referring to here. And then we have the allocation of overhead. Allocation is going to take place. Remember, the allocation overhead is over here. That's our third debit to work in process inventory. This is where we allocate overhead. And you do not need to worry about the allocation process. You don't have to calculate allocation. You just need to know what the journal entry looks like, because that's an additional step. Once all production is complete, what happens? Gets transferred to finished goods inventory. So that's where we actually move it to finished goods. So we say the table is actually ready to be sold. All right, so before we move on, let's just think about this logically. Does this fit nicely in between our purchasing and revenue processes? Yes. So the purchasing process is kind of what dictates what we're going to buy. That's the actual purchasing of the items. And then once we transform those items into some sort of useful product, those finished goods, that's what we sell to consumers. All right. So that's why that's pigeonholed in there. Now, I do want to make a note of this. This is something that I just realized, and I can't believe I've been teaching the course this long. In our purchasing process description last week, we talked about two different resources. All right. We talked about cash, which is kind of our end resource, but we also talked about products. Strictly speaking, if we're going to use it in this vernacular, purchasing is not going to be products, it's going to be raw materials. So that's going to be specific to a manufacturing environment. Now, if I ask you to create a UML diagram and I say, all right, create a purchasing diagram, if you still use the term products, that would be fine. Simply because we do not know what these products are going to be used for. They could be used for some sort of internal use. They could be sold directly as is to a customer, or they could be raw materials. But in this scenario, if we're talking about using the raw materials that were purchased, they do need to be classified as raw materials, because the whole goal of changing those raw materials is into those finished goods, which are technically the products that we're aiming for. Now, it's a little bit confusing. I'm going to reiterate that as we get to our full diagram, we get to the UML process, but there's a little bit of differentiation that takes place there. All right, basic BPMN diagram. So we already know that we've got a step where we say, hey, do we need more goods? If the answer is yes, our first activity is authorization of production. All right, that was our first step. The next step is going to be the issuance of raw materials. That's the first activity. So we can't have any production of goods if we don't have the raw materials to create those goods. We can't create our table if we don't have a piece of wood. All right, again, assuming this is a wooden table, which is absolutely not, but we're going to say that it's a wooden table for purposes of this analogy. So raw materials, that's where we recognize our first journal entry, which is the transfer out of raw materials inventory into work in process inventory. Then as we're performing work, we can add additional raw materials if necessary, but we definitely need to add our conversion costs, which, remember, our conversion costs are going to be our direct labor and our indirect costs, which we call overhead. That's where we allocate our overhead there. Once we complete production, that's where we record our final entry. That's going to be the recognition of finished goods. We move it out of work in process inventory into finished goods. Now, this is your BPMN diagram, and as before, the first diagram, this is your replication diagram. If I ask you this question on the exam, I would expect you to be able to replicate this diagram exactly as it looks right here. Now, the question is, do I need to include the brackets, Dr. Barnes? The answer is yes, okay? Every single one of them, okay? Because we have journal entries for each of those processes. So you do need to understand what those there. Does it need to be word for word? No, it needs to be kind of the general gist of what we're talking about. If you just say journal entry here, journal entry, journal entry, that's not sufficient. You do need to describe the journal entries.
So the bracket for every single BPM diagram of non-signal journal entries?
Yes, yes. So in revenue and purchasing, they recognized recognition of whether it would be recognition of asset or recognition of liability. Then subsequently the cost or cash receipt versus or the cash disbursement. So those were a little bit more straightforward. This does not follow the pattern that we looked in the previous ones. So these are going to be very, very implicitly associated with those journal entries. And just for context, I'm going to scroll back and forth really quickly, but I apologize for that. But remember, when we talk about issuance of raw materials, that's his first journal entry right up here. We talk about the performance of work, which is adding direct labor and allocated overhead. That's this third journal entry and this sixth journal entry, I guess, technically speaking. And then this final journal entry right here, this final transaction right here, that's the final journal entry, transfer of finished goods to work in process inventory. Now, if you do the comparison, that should be straightforward. That's why I said you could ignore the other journal entries, but you absolutely need to know those and how they fit into the BPMN diagram. So that'd be good if we stopped right there. Just call it good. Just ignore that. Do you think I have another BPMN diagram for you? Yes, unfortunately so. Unfortunately so. This is your replication diagram. This is your interpretation diagram. And I actually really like this diagram because I think this is more representative of what a true process would look like. We still only have one entity. And just as a refresher, we learned about BPMN diagrams so long ago. If we have two entities, what do we actually have to create if we have a second entity? So we have two lanes here, which represent different departments. We got inventory management and the conversion process here. So probably manufacturing done here. This is going to be all within the same entity. If I have a different entity, can I just add another lane? No, I have to create a new pool. Remember the whole analogy is the swimming pool. If you're in one swimming pool, that's one entity. If you're in another swimming pool, it's a completely different entity. Can you transfer information across pools? Yes. Okay, but you have to create a new entity for that. Within the same entity, we could have multiple lanes. Those represent departments in the same organization. So I know it's been a while, but I wanted to kind of refresh that. This one's pretty easy because we only have two departments. We're talking about inventory management and then the production. So authorization of production, and then we set up a batch. All right. Have you seen that term batch before? So what is a setup of batch thing? I like to think that it means that we want to make sure our production workers are well fed. So we're going to set up a batch of pancakes. So we're going to make sure all are fed, all filled, all good. And I actually used to ask that question on 221. It says, what does a batch mean? And I would say, whip up a batch of pancakes. But unfortunately, that's not what it means. So manufacturing, for most situations, are we going to be manufacturing one item at a time or multiple items at a time? And it depends on the manufacturing environment. If it's Boeing, it'd be one item at a time. But if we're talking about like General Mills, does anybody know what General Mills makes? What their most common product is? Yeah, breakfast cereal. Do you just make one box of cereal at a time? It says, here's a Cheerio, here's the Cheerio, here's another Cheerio. Yeah. Probably make more than one Cheerio at a time. Okay. Probably more than one box of Cheerios at a time. So you're making a batch of boxes of Cheerios. All right. And a production run can include one batch or it can include multiple batches. So it's important to note we're going to set up an individual batch and then we're going to complete our production run, which could be one time or it could be multiple batches, which would be multiple different instances of creating boxes. So that's where we get to the familiar stuff, issuing raw materials, performing work, and then we have an inspection of the work. All right. So when we say inspection of the work is an important step, we've seen this already in our previous situations, but yeah, inspection of the work. Why? We don't want selling goods that are not finished, that are not truly done. So if you're working on the production line and all of a sudden the machine malfunctions and there's a whole bunch of boxes of empty cereal being sealed up, do you want to sell those boxes? That'd be really, really awkward. You know, a customer comes home, doesn't notice the weight of the box, goes home and pulls out the Cheerios and it's just air. It's like, oh, well, this is awkward. I'm really hungry now. Yeah. So yeah, we want to make sure that we inspect our work and make sure everything's good. We're good. We're discarding the errors and going back to finish our production run. Because if there are errors, we've got to make new products that are going to fix that problem. So if the batch is done, good. And then you'll notice there's a separate gateway here. There's two gateways, which is really kind of cool, that it says all done, which is second gateway is this first gateway specifically with a single batch. The second one saying that we're finishing all production because we could have a production run that has more than a single batch in it. So we could say we're going to produce 100 boxes of Cheerios, which probably produce thousands of boxes in a single batch, but just for the number, 100 boxes of Cheerios, but we need to produce 600 boxes in total. So we have 6 batches, 6 different production runs. Once we finish the 6th batch, then we're all done here. Then we complete production and update records as we note. Again, this is an interpretation diagram. You do need to be able to understand what's going on in this diagram. The good news is I don't think any of this is particularly difficult to follow. All right. Even if I didn't give you my keen intuition about what's going on in this diagram, I think you probably could figure out that setup batch does not refer to a batch of pancakes. You probably could figure out that discard errors is exactly what it sounds like. You could give me a very quick narrative and interpretation of this diagram that would be very appropriate for the scenario. So that's all that we're looking at here. All right, well, that BPMN, what does that mean that's probably following? UML, yeah, it's like the UML, UML. There's probably an acronym out there. It's good. Something like untold misery of learning or something like that. Yeah. UML diagrams. They're definitely the low point of this course. They're definitely the low point. People do not like UML diagrams. The good news is we've got one more day of talking about UML diagrams. Then we got to do an exam on it. Then we're done with them for the rest of the semester. Okay. And there'll be much celebrating after that. But the bad news is that we still have more UML diagrams to talk about. So let's go through our conversion process summary, and then we're going to talk about how we set up this UML diagram. The bad news is this is the most complex UML diagram of all of them. It is the most difficult to follow, and there's not a real easy way to simplify it. So we're going to have to talk about that. So inventory dry levels drop below a certain point, authorized production. Quantity of inventory produced and raw materials are determined based on existing finished goods. Raw materials are issued and documented a bill of materials. Labor is incurred in production. This is going to only include assigned events, which excludes overhead since it's allocated. Now, I want to make a note of this. This is going to be a little bit confusing. When we start talking, we're going to try to simplify our diagram as much as possible. And you're going to say, this does not look simple, Dr. Barnes. Trust me when I say that we could make it a lot more difficult. We're going to exclude labor and overhead as potential resources. Not necessarily the assignment of labor, but we're going to exclude the labor and overhead as resources. Why is that the case? The answer is because labor and overhead are implicit to the manufacturing process. So in order for that piece of wood to become a table, I have to include labor and overhead. Every single time I create that table, I have to include labor and overhead. There's no exceptions to that rule. So I can assume that in that finished goods, that includes an assignment of labor and overhead. I do not include that in the UML diagram. So that being said, let's go ahead and talk about what is necessary for creating the UML diagram. How do we always start the UML diagram? Let's say you're sitting down for the exam and all the studying just suddenly goes out of your head. You don't remember how the UML diagrams are set up at all. You spent all that time memorizing it and it just goes away. Just the nerves get to you. What is going to be your first step? You're going to have to remember the wise words of Dr. Barnes and saying, remember your entities. What are our three entities again? Resources, events, and agents. Okay. So let's go ahead and identify our resources, events, and agents that would be implicit to the conversion process. Now, the good news is resources and agents should be really easy. Agents in particular. What is our lone agent in the conversion process? Employees, the people who are doing the work. Okay. We can collectively call them employees. Could we categorize them into different areas? Yes, but why make this more difficult than it needs to be? Employees, one agent. Okay. Then we have resources. And we've already identified our resources. We've got a form of inventory coming in and a form of inventory going out. What is the form of inventory coming in called? Raw materials. What is the form of inventory going out? Finished goods. Could we include work in process? Yes, but again, in order for it to reach finished goods, it has to naturally go through work in process. That is why we do not have our conversion cost implicit in that. So there's a lot more that could be put in there, but again, keep it simple. Resources are going to be our work in process. Or sorry, raw materials. I just said it was not work in process. Raw materials and finished goods. Now, the difficult part comes when we start talking about the events. So let's go ahead and step through this piece by piece. What is our triggering event according to our BPMN diagram? All right. What is our triggering event that needs to take place? Our triggering activity. Yeah, so we get low materials, so we production or authorized production. So there's some sort of production authorization. We're going to include that in there. Now, the UML diagram is going to look a little bit weird because of the way the events are structured, but I'll explain that shortly. So we have a production authorization. Once production is authorized, what needs to happen in order for production to continue? There needs to be an issuance of raw materials. That's what our first transaction tells us, the issuance of raw materials. Okay, so we're going to have a second event called an issuance of raw materials or materials issuance. And then, naturally speaking, but regardless of whether the materials are direct or indirect, we're going to have some labor at some point. So we're also going to issue labor. We're going to refer to as labor operations, but it's basically labor issuance as well. So three events, production authorization, materials issuance, labor issuance. That's the most difficult part. That's the most challenging part. And the UML diagram does not do us any favors because it includes all of these items, but you will notice that the events is not sequential. All right. The events are not sequential, which we're going to talk about that, why that's the case, but let's make sure that we know what's going on here. So here's our employees here. Here's raw materials. Here are finished goods. And these are exactly as they sound. Okay. These are exactly the sound. So production authorization is our authorization to produce. Secondly is going to be a production authorization. We're going to actually need to know what we need for finished goods, which is why we have an association between finished goods and production authorization. We do not need to specify production authorization for raw materials because there's no need for an association there. We only care about what the finished goods should be. We don't care about how much raw materials we have to use to accomplish that. That's going to be associated with our materials issuance. Similarly, our labor operations get added as part of the finished goods down here. We're going to record our materials issuance. We're also going to record what goes into a bill of materials, which we're going to talk a little bit more about what that means shortly. And then we're going to record our use of labor. Now, the question always comes up in the previous UML diagrams, our events have been sequential. We start out with a quote, then we go to order, then we go to cash receipt. Does everybody remember that sequential process? Or purchasing, purchase order, cash disbursement. Why is it not sequential here? Why don't we start with the production authorization? Because that's the first event. The answer is twofold. The first one is obvious from the structure, is that we need to be able to have clean associations. We want to have our materials issues up here and our labor issue associations right here. If we move the sequential, then I move the production authorization up here, all of a sudden these associations are overlapping. It gets very confusing. But the other one has to do with this term duality, okay? Duality. This duality word is going to sound really, really complicated. And first of all, you do not need to include that in your UML diagram. You don't need to include an additional wording, but you're probably wondering, what does this duality term mean? And all the duality is it basically says that the operation can move in either direction, all right? An operation can move in either direction. In other words, we could actually start with a labor authorization, and that labor authorization triggers a production authorization. So it does not necessarily have to be the initiating event. Same with materials issuance. A materials issuance should only occur if production authorization occurred, but if material issuance does occur, that may trigger a production authorization. So strictly speaking, these are not sequential events. They can occur at any point in time in a production environment, which is why we don't have them in a sequential order. So duality kind of dictates the fact that these can have different associations in different directions. Beyond that, you don't need to worry too much about that term duality. The only reason I bring it up is just to explain why production authorization is stuck here in the middle. This is one of the things that you will have to remember, because it creates a lot of complexity in a UML diagram. If I throw this UML diagram at you, you'll need to remember that we start with the materials issues up here, even though that technically should not occur until after production has been authorized. So materials issuance, production authorization, labor operations. This is why this is the most confusing diagram. All right. So everybody clear on this one? Does that seem pretty straightforward? I will tell you right now that if you can remember the stuff in the middle, the stuff on the left and the right should be a cakewalk. The associations are a little bit challenging, but you will notice that there's very few and minimal associations here. The one that's probably the least intuitive is the one from finished goods to production authorization. And that's why this is explained detailed here. As for the other associations, not only the associations fairly implicit, but the multiplicities to interpret their relationships are very straightforward. Okay. So this is your replication diagram. Again, this is the most confusing one, mostly because of that production authorization sitting in the middle. But I think this is pretty simple and straightforward in the grand cosmos in the scheme of things. All right, but we already know that if we talk about a replication diagram, if we talk about what you need to know, there could be variants on that are more confusing. So with every single situation we've talked about a fourth class that I've always thrown in there. What was that fourth class called? Conceptual structures. Yeah, conceptual structures. So what are some examples of conceptual structures? The good news is one of these we've seen already. Our product categories. Remember we talked about product category management. We've seen this already in many situations before. We can include that in this diagram as well. Again, you're not responsible for replicating this particular diagram, but I just want to make sure that you know what's going on here. This one's a little bit confusing though, because we talked about the bill of material. Could we actually split out the bill of material as a class on its own? The answer is yes. All right. Why might we want to do that? The reason has to go with this idea of type image. All right. Now, the only reason I'm explaining this concept of type image is it will be relevant to your homework. All right. It's very unlikely that I will ask it on the exam, although I do think it's in the study guide. So what does a type image mean? And then in UML diagram vernacular, that is basically just saying this is a specific piece of information that management wants to know more detail about. Like, how will materials allocated to production? Now think back to your managerial days. Is this something that you would be very concerned about if you're a management accountant? Would you want to know how much materials go into the finished goods? Hopefully so, because you learned those variance analysis, and that was the whole one of the points of two or three of those variance analysis, or two of them. Yeah, the direct materials cost variance and direct materials efficiency variance. That had a lot to do with the materials that went into the production. You were trying to make sure that you understood what's going on with that. So this bill of material is a way of tracking that. So when you see the term type image, that's basically just saying this is an explicit piece of information the management wants detail about. That's all there is to that, which is kind of the definition of a conceptual structure in the first place. So yeah, that's all there really is to it. All right. What do we got? We got 8 minutes, so we got two more topics to talk about. I'm not going to spend a lot of time on this next one, but I do want you to buckle in because this is a little bit intimidating. What did we talk about at the end of our last discussion? Well, we talked about controls, which we're going to still talk a little bit about very briefly. But what was our last UML diagram discussion when we talked about the purchasing process? What did I throw at you that I said, get ready, it's going to get a lot worse? Remember, I took one UML diagram, I stacked it on top of the other, and I said, hey, look at this, isn't this cool? Yeah, there we go, there we go, there we go. All right, the integrated UML diagram. Now, I just want to remind you, you do not need to be able to replicate this. This is far more than a task that I ask. You do need to be able to understand and interpret this. All right. So strictly speaking, what do I want you to note? I want you to be able to make sure you identify what are the shared resources and our shared resources and internal agents and items and the external events and items that are process specific. So let's identify those because that might be relevant to the exam. All right. So we have our three process areas. If we know our UML diagrams for all three process areas, this should be pretty straightforward. All we need to know is which of our entities are shared between processes. We've got one entity that all three processes utilize. What is that entity? Not what is the process? What is the entity? So remember, our entities are resources, events, or agents. And I'll give you a hint. It's one of our agents that all three processes share. Employees, all three have employees or the agents. So we can actually include employees right here in the middle and say, this is part of all three process areas. Okay. Let's with our agents. While we're with agents, let's go ahead and talk a little bit about our agents. Okay. That's our only agent that we need to worry about. Okay. So all our other agents are supplier specific. So let's go ahead and talk about our resources. Now, our resources are a little bit more challenging because our resources split between all our different areas. So we've got one resource that is common to both purchasing and inventory, or purchasing and conversion. Which resource would that be? Raw materials, yes, the things that we purchase for production. Okay, we purchase those items for production. And remember, this is what I was talking about in our purchasing diagram when we looked at this. This was actually called products. If we put it in the UML diagram, we need to be very specific. This is raw materials. Why? Because it's eventually going to go into production and become finished goods, which are our true products. So we can call this products or finished goods down here, whichever one. So let's go ahead and just say that this is our finished goods, even though it says products up here. This is going to be shared between our sales and our conversion processes. Does that make sense? We buy our raw materials via the purchasing process. We issue it as part of the conversion process. So that's shared between those two processes. Then when we finally finish our conversion of the raw materials into finished goods, which we're calling products here, we sell those products as part of the sales process. So that's why it's shared there. We've got one more resource that we need to identify. One of our resources is shared between our purchasing process and our revenue process, though it's not going to be part of our conversion process. Which resource is that? Heard it over here. Anybody else want to take a guess? You're absolutely right, but I want to see if anybody else knows what it is. Cash, that's what it is. I had to have at least two voices. Yeah, that's all right. So look, we've got cash sitting right in the middle here. Is cash part of conversion? No, it's not. You'll notice it's got lines to purchasing and sales. It sure looks like it's part of conversion. But did we ever use cash in conversion? It's like, we're going to take cash and we're going to convert that into a table. That'd be just a waste of money right there. Actually, that would be something if you're really, really rich and had way too much money. It says, I made this entire table out of $20 bills. And you'd as a poor college student, be like, why? I could have bought Chick-fil-A with that. Yeah. All right. So cash is not part of our conversion process. It's going to be part of our purchases and sales, which makes sense. We purchase with cash. We acquire cash as part of our revenue process. We receive cash. That's going to be our commentum. So again, the key to understanding this diagram is going to understand those four. I just want to say, I want to say entities, but those four items, three of them being resources, one of them being an agent, that are shared between processes and understanding how they are shared. If you got that down, this diagram is a piece of cake. Okay, it's just basically the combination of all three UML diagrams, but you got to know what's shared between those. Last item to talk about conversion to process controls. So remember, when we talk about conversion and process controls, let's start with a business rule or intention, okay? So like supervisor must produce authorize production of $5,000. Generally speaking, the controls can actually be dictated through either access controls or application controls. Now, I referred back to this when we talked about this in purchasing, but I want to reiterate. I know it's been a week, okay? What word do we generally see when we talk about access controls? What word generally starts an access control? Employee, okay? Because remember, an access control is basically dictating what areas of a system an employee has access to. That was our example of you getting on the computer and signing in. You're not really employees of Truman State, but you're taking the role of employees in this class doing the work. So you have to have access authorization in order to be able to get onto the computer. Then we talk about application controls. What term does that usually start with? System. Remember, system dictates the trail of information. It tracks it so we can know what's happened. Remember, employee or access controls are generally preventive. Application controls are generally detective and corrective. So in this situation, employee authorizing production cannot modify inventory records. This is basically saying somebody cannot have access in one area and also have access in another area. It's basically an example of what concept that we just talked about with respect to controls. Remember, I said it was my favorite type of control. I had a picture of a car on there. What was that called? Segregation of duties. Yes, segregation of duties. Separation of custody, authorization, recording. Custody of assets, authorization of transactions, recording of transactions. By the way, if I repeated that like 3 times in the class, it's probably really important, okay? So probably really, really good to note. I'm just trying to make sure that we get that emphasis on there. So custody, authorization, recording, segregation, responsibilities, which is a very, very pronounced example of access controls. For application control, the system must provide authorization order, control number, default values, and range limit checks, and I'll create an audit trail. So it's basically providing a tracking system for us to be able to follow transactions through the system. So if a problem occurs, we can figure out what would source the problem and correct it. So what are some examples of this? These are all examples that come from Exhibit 9-6, which I would love to spend some time on, but we don't have time to go through it anymore. So please make sure you take a look at it on your own as you're preparing for your homework on Wednesday. Have a wonderful day. See you in a couple.